Welcome back, everyone. Today, we're diving into what has to be one of the absolute wildest stories in the startup world right now. We are talking about Wispr Flow. It's a voice dictation software that's growing at this just blistering pace, and it's fundamentally changing how professionals interact with their computers. It is basically a masterclass in startup agility, finding brilliant product market fit, and realizing that sometimes, your side project is actually the main event. Okay, let's just dive right into this. Have you ever actually stopped to think about how ridiculous it is that we're communicating with these state-of-the-art, super powerful machines using a physical layout that was literally invented in the 1800s? I mean, the QWERTY keyboard is basically a dinosaur. For decades, massive tech companies have been trying to replace it with voice, but let's be honest, it always felt super clunky. Well, that is finally changing. And the crazy part? The catalyst for this change is a startup that originally had absolutely zero intention of building a consumer software app. So, the whole story starts with two brilliant Stanford roommates on a total mission. On one side, you've got Tanai Kothari. This guy had already built over 50 apps by the time he was 18. He represented India at international informatics Olympiads, and his childhood dream was literally to build Jarvis from Iron Man. How cool is that? On the other side, you have Sahari Garg, who is a true Stanford AI research prodigy. Together, they founded Wispr with this incredibly ambitious, almost sci-fi goal. They wanted to completely eliminate screen time and cognitive overload. To pull that off, they spent over 2 years doing some heavy R&D on hardware. They were specifically working on a non-invasive neural wristband. The idea was it would read nerve signals from your brain, so you could just silently mouth words, and the device would translate those signals into text. Totally wild, right? But by mid-2024, they hit a massive brick wall. The tech was real, but the market simply wasn't ready for a brain-computer interface. The hardware was essentially a commercial flop. But here is the absolute genius part. To test that futuristic wristband, they had built this really clean internal software voice dictation layer. They looked at that testing software and had this light bulb moment. That was the actual masterpiece. So they initiated what Tanai called a gun-to-the-head 6-week sprint to pivot entirely from a hardware company to a software company. They launched Wispr Flow on Mac, and the result was just explosive. I mean, they instantly hit #1 on Product Hunt for the day and the week. Millions of views just poured in. The sheer speed of this pivot is mind-blowing. As Tanay himself noted, just 2 months prior, they weren't even a consumer software company, and now they had a product that was converting free users to paid at absurdly high rates, like way above the industry standard. The big secret behind all this explosive growth really just comes down to one thing, and that is accuracy. They didn't just build some lazy wrapper around an existing AI model. Thanks to Sahaj's deep AI background, they built custom automatic speech recognition models. When you compare the major platforms head-to-head, it's actually pretty shocking. Apple's native dictation sits at this super frustrating 47% error rate. Even OpenAI's mighty Wispr model is at 27%. But Wispr Flow, they absolutely crushed the tech giants with just a 10% error rate. It magically cleans up your speech, removes all those awkward ums and ahs, and formats everything flawlessly. Because the accuracy is just so phenomenally high, something magical happens to user behavior. After using the product for 6 months, the average Wispr Flow user is inputting an insane 72% of their characters using their voice. Just think about your own day for a second. Imagine typing almost 3/4 less than you do right now. They aren't just giving people a cool new tool, they are completely rewriting daily digital habits across nearly 70 different apps. Which leads us directly to this staggering metric. They boast an 80% retention rate at the 6-month mark. For consumer software, that is huge. This proves they didn't just engineer a neat novelty app that people try once and immediately delete. They engineered a genuinely sticky habit. When your retention is that high, your growth just compounds effortlessly because you aren't constantly scrambling to replace users who churned out. And this half-second metric brilliantly illustrates the ultimate level of user trust. On average, users are hitting the enter key or sending their message just half a second after the dictated text actually appears on their screen. Half a second. Think about that. That means they aren't scanning the paragraph for typos, they aren't going back to fix weird grammatical errors, they just trust it. Wispr actually calls this the zero-edit standard. Because the product works via a simple, completely frictionless hotkey hold, you don't even have to switch apps or change modes. You just hold a key down, speak naturally, let go, and hit send. It's that easy. They've fully optimized for that exact moment where typing actually begins to feel like a frustrating interruption compared to just speaking your mind. So, okay, you have a product people absolutely love, but how do you actually distribute it to the masses without blowing your entire budget on Facebook ads? Well, Wispr Flow tapped into a brilliant and highly organic marketing playbook. It turns out their early adopters happen to be some of the most hyper-connected people on the planet, Silicon Valley venture capitalists. These high-profile tech elites didn't just love the product, they literally acted as a massive free distribution channel for it. Reid Hoffman, the founder of LinkedIn, publicly declared he was voice-pilled. Tech legends like Mark Andreessen and Steve Wozniak became daily users. The CEO of Superhuman even called it one of the most important consumer AI products since ChatGPT. And here's the real kicker. When a VC is using your product to write their daily memos and emails, they naturally tell all the founders in their portfolio companies to use it too. It created this incredibly powerful viral loop fueled by the most influential voices in tech. But, they didn't just stop at Sand Hill Road. To break into the mainstream, they forged a really unique partnership with Stephen Bartlett's The Diary of a CEO, which is literally one of the biggest business podcasts on the planet. By partnering directly with a platform reaching 35 million ambitious professionals, Wispr took their VC-proof tool and put it squarely in front of their exact ideal customer profile on a global scale. All of this crazy momentum completely set the stage for their biggest leap yet, conquering mobile. But seriously, how do you generate hype for a mobile utility app? Wispr somehow managed to get a jaw-dropping 375,000 people to sign up for a waitlist for their Android release, all before they had even shipped a single line of code to production. Let that sink in for a second. Well, here is exactly how they built that gamified advertising machine. They didn't just ask for an email address like everyone else. They built a leaderboard. If you shared the waitlist link on Twitter or LinkedIn, you ranked up. If someone actually used your referral link, you got a massive multiplier. They even offered exclusive merchandise for the top 100 spots. And, brilliantly, they kept the closing date of the waitlist a total secret, which just drove massive FOMO. Every single person competing for the top spot basically became a free walking billboard for the company. So when the Android app finally launched, it wasn't just some basic, lazy port of the desktop app. It was designed as a smart, floating overlay to entirely bypass Android's notoriously fragmented keyboard issues. But my absolute favorite detail here is actually a personal one. Tanai specifically built native English support into the voice model, so blending Hindi and English, simply so he could effortlessly chat with his family back in India using his natural speaking cadence. It's exactly that kind of deep, user-centric engineering that really sets them apart from the pack. Now, what's really interesting about this compounding user base is how this viral loop locked in a phenomenal baseline of growth. They aren't just seeing one-off spikes from a viral moment. They've been logging a steady 40% month-over-month growth in users. And when you compound 40% every single month, it results in the 100x yearly user explosion they've experienced. It is just compounding at an incredible rate. With this foundational growth totally locked in, they are aggressively expanding the ecosystem. They are already inside 270 Fortune 500 companies right now. Their systems are processing over 100 million spoken words every single week. But the team realized that dictating text is really only half the battle. What about the countless hours we spend just listening in meetings? Enter their next major product evolution, the Wispr Flow Note Taker. Come on, we've all been there. You're in a super long Zoom meeting, you zone out for a few seconds, and suddenly someone asks for your opinion. It is literally terrifying. Well, Wispr integrated a brilliant feature into their note-taker tool. You literally just click a button that says, "What did I miss?" and the AI instantly generates a private summary of the last few minutes of the conversation for you. It's a feature that directly solves a painful everyday human embarrassment. It's just so smart. Of course, no hyper-growth startup journey is without a few bumps in the road. Recently, a user discovered a flaw regarding how some data was being handled, which obviously sparked a bit of a privacy controversy. But what's really fascinating here is how the company survived it. They owned the mistake immediately, they patched the issue incredibly fast, and they communicated transparently. Ultimately, the product was just so deeply ingrained in habit forming for its users that people simply couldn't abandon it. The pure utility of the tool completely outweighed the temporary loss of trust. So, the crucial takeaway here is this. Wispr Flow didn't just build a cool little dictation app. They forced a total paradigm shift in human-computer interaction. They proved that when you completely remove friction, increase accuracy to near-human levels, and integrate flawlessly into existing workflows, people will gladly stop typing. As the industry analysts are saying, the keyboard isn't dying, it is already dead for the people who've actually experienced the alternative. Which leaves us with one final, pretty provocative question to think about today. As this technology becomes faster, smarter, and seamlessly integrated into absolutely everything we do, how long is it going to be until you throw your own keyboard in the trash? Think about it. Thanks for hanging out and diving into the future of tech with me today. Keep questioning your digital habits, and I'll catch you guys in the next one. $2 billion. Look, that's the figure institutional investors are currently grappling with as we unpack the pre-IPO financials of Wispr Flow. We're looking at a startup that completely ditched its original hardware product, executed a pretty ruthless pivot to software, and just pulled off one of the most aggressive capitalization sprints in recent Silicon Valley history. But if we really want to understand how this plays out in a public market debut, we've got to look past the hype cycle and dissect the actual numbers. That $2 billion valuation, locked in during their August 2026 Series B, represents a massive, seismic shift in market expectations. We aren't just looking at a neat consumer productivity tool anymore. This is an enterprise platform attempting to fundamentally rewrite human-computer interaction. And for Wall Street, that signals a total addressable market, a TAM, that completely overshoots basic dictation software and moves right into the massive enterprise workflow and automation space. Capturing even a fraction of that TAM is exactly what generates unicorn multiples. So, let's break down the mechanics behind this $2 billion markup. Map this progression out with me for a second, because the sheer velocity is stunning. In June 2025, Wispr raised a $30 million Series A. Just 5 months later, in November, they secured an extension that catapulted their valuation to $700 million. Fast forward a mere 9 months to August 2026, and Tier 1 Capital jumps in. Menlo Ventures leads a massive $280 million Series B, nearly tripling the valuation to $2 billion. From $30 million to $2 billion in exactly 14 months. In a macroeconomic environment where capital is getting incredibly expensive, this kind of velocity tells us we're looking at a hyper-competitive AI funding landscape. Venture firms are literally willing to swallow massive premiums, and founders are accepting intense dilution just to guarantee their spot on the cap table of a presumed category winner. But venture capital influx is one thing. Let's pivot to the revenue trajectory and growth metrics to see how they plan to justify this. The underlying monetization engine relies on a really aggressive conversion architecture. They run a classic freemium funnel, but the conversion triggers are almost completely frictionless. The basic tier gets you in for free, right? But it hard caps you at 2,000 words a week. Psychologically, if you're using this daily, you're going to hit that wall incredibly fast. That forces an almost immediate transition to the $15 a month Pro tier to unlock unlimited usage and command mode. But here's the real kicker. The massive ARPU, average revenue per user expansion, happens at the enterprise tier. At $24 per user per month, they're unlocking the admin controls and the strict compliance reporting that corporate IT departments absolutely require. They are taking a sticky consumer habit and transforming it into a highly profitable recurring revenue stream. And this aggressive conversion strategy drove Wispr Flow to an estimated $10 million in annual recurring revenue by late 2025. Now, $10 million is a fantastic ramp-up for that time frame, but when you stack that against a $2 billion valuation, you're staring at a staggering 200 times forward revenue multiple. A multiple like that, it prices in years of absolutely flawless execution. It leaves literally zero room for error and assumes this company's growth trajectory is basically a vertical line. The raw velocity of that trajectory is exactly what the market is betting on. Wispr has reported over 150% quarterly revenue growth for 4 straight quarters. To put that into perspective, top-tier SaaS companies pop champagne over 50% year-over-year growth. Wispr's doing triple that every 3 months. They've been hitting 40% month-over-month user and ARR growth, which translates to a massive 100 times year-over-year expansion. It's really only through this kind of relentless, aggressive month-over-month compounding that a company can rapidly grow into and eventually compress a 200 times revenue multiple before the public markets get a chance to scrutinize them. But hypergrowth only matters if your bucket isn't leaking, which brings us to their unit economics and retention moats. The behavioral shift we're seeing in the user data is just staggering. After only 6 months on the platform, the average user inputs 72% of their characters via voice, spread out across roughly 70 different desktop apps. Manual typing absolutely plummets to just 28%. By fundamentally changing human muscle memory and capturing the vast majority of input volume, Wispr is building enormous switching costs. Think about it. Once an enterprise workforce gets conditioned to operating at that speed across all their tools, trying to rip that software out becomes a total operational nightmare. That deep operational integration leads to an unheard of 80% retention rate at the 6-month mark. In the consumer and prosumer SaaS space, seeing a retention curve flatten out this high is exceptionally rare. Financially speaking, this completely flips the lifetime value to customer acquisition cost ratio, the LTV to CAC. When users just don't churn out, every single marketing dollar you spend to acquire them yields an exponential return, and that generates the free cash flow they desperately need to sustain this aggressive scaling. The real secret sauce behind this retention, the absolute core of their product stickiness, is what they internally call the zero-edit standard. The telemetry data reveals that users are hitting the enter key a mere half-second after their dictation pops up on screen. Half a second! That is physically not enough time to proofread anything. It shows unconditional trust in the AI's output. When a software tool gets that reliable, it basically becomes invisible. It fades into the background like electricity or running water. And when your product becomes invisible to the user, your churn drops to near zero. Now, let's transition over to their enterprise penetration and market position. So, the consumer product essentially acted as a Trojan horse right into corporate IT infrastructure. As of late 2025, this platform was already operating inside 270 Fortune 500 companies. We're talking tech heavyweights like Amazon and Nvidia. They boast 100,000 total businesses on the platform, and they're signing 125 new enterprise customers every single week. This B2B velocity is entirely unlocked by their strict SOC 2 Type 2 and HIPAA compliance. Clearing those rigorous procurement hurdles, especially in healthcare and legal, is notoriously slow and painfully expensive for young startups. By getting that done, Wispr has built a massive barrier to entry against newer, leaner competitors who might try to move up market. But of course, no institutional analysis is complete without a stress test. We have to look at the bear case and the real risks here. Right now, their primary market advantage is built entirely on accuracy. Their error rate sits around 10%, which is a stark contrast to the 47% error rate you get with Apple's native dictation. But look, this is a highly precarious moat. The permanent, looming threat here is platform risk. At literally any moment, big tech incumbents, Apple, Google, Microsoft, could just upgrade their underlying operating systems with new frontier models and close this accuracy gap natively. In Silicon Valley, they call this getting Sherlocked. If Apple suddenly bakes a 10% error rate directly into macOS, Wispr's main selling point evaporates overnight. To try and preemptively combat this commoditization, the company deployed a new proprietary speech understanding model they call Canto. The strategy is to push error rates safely below that critical 10% threshold. But defending this technological lead means burning millions of dollars in compute, R&D, and capital expenditures, or CapEx. They're locked in a permanent, incredibly capital-intensive race to train better models just to outrun the free native updates that big tech can push out in their sleep. That continuous CapEx burden is going to put a heavy strain on their long-term margin profiles. And playing catch-up on tech isn't the only risk to their bottom line. In November 2025, a massive privacy scandal hit. A viral software analysis showed that despite advertising zero data retention, Wispr Flow was actually locally storing user screenshots and forcing unauthorized background data transmissions. Yikes! For an application that demands deep accessibility permissions across your entire operating system, this blew open a massive, immediate trust gap. In the enterprise software world, especially for a company leaning on HIPAA compliance to sell to doctors and hospitals, unauthorized data transmission is a catastrophic headline risk. It's the kind of thing that triggers immediate, unrecoverable enterprise churn. That single misstep completely shifted the competitive landscape, rapidly accelerating the rise of edge AI. This privacy mess created a permanent vulnerability, basically rolling out the red carpet for offline, local-only competitors like Wispr and Super Wispr. Because these rivals run local large language models directly on the user's hardware, they operate on a flat fee basis and never send a single byte of audio or data to the cloud. They are now aggressively hunting the exact compliance-heavy medical and legal sectors that Wispr desperately needs to keep on board if they want to justify that subscription revenue and that massive multiple, which ultimately brings us to their public market prospect. Their strategic defense against all this looming commoditization relies heavily on their newly formed Advanced Interfaces Lab. They brought in a former Amazon Alexa chief scientist to run it, which signals a very deliberate TAM expansion strategy. Wispr knows dictation alone isn't going to satisfy the public markets, so they're aggressively pushing to become a comprehensive, next-generation operating layer, routing tasks, generating dynamic interfaces on the fly, and even testing out hardware partnerships, like integrating with the Oasis ring for discrete dictation. It's incredibly ambitious, for sure, but it also introduces the very real risk of hardware pivot distractions for a company that honestly just needs to execute flawlessly on its core software to survive. So, we are left with the defining existential question that institutional investors, underwriters, and the broader market absolutely must answer before backing a public debut. Will voice actually establish itself as a massive, independent, multi-billion-dollar software layer that sits above the operating system, or is it simply a temporary feature destined to be absorbed natively by iOS and Windows? How you answer that question determines whether Wispr Flow is the next great enterprise platform, or just a beautifully executed, highly valued, but ultimately temporary stepping stone in the evolution of human-computer interaction.